Yeah, it's UPB on this Friday, April 29, 2016, TGIF. S&P 500 futures are lower. To start the trading session, we're down over 1/3%. My goodness. We were down yesterday as well as the Bank of Japan, the BOJ, Bank of Japan, disappointed the market. And we fell. Started off the day lower. But then the market came back. Pavlov's dog was eating equities. It was, I think I can, I think I can, I think I can. And then Carl Icahn came on CNBC, liquidated his entire Apple position. And it was like, it went from I can to I can't. S&P 500 futures plunged, bounced off their lows, and now we're through that here this morning. It's something to watch here is that 2100 level that I continue to point out. Relentless. It has started the crash back in August 2015, 2100, right there. We came back to it in November. Guess where the swoon started? Right near 2100 to start the year. The worst start to a year since the dinosaurs walked the earth. I keep saying that. Like a broken record. We didn't get back up to the highs that we saw. We put in a lower high. Starting to pull back. Is this pullback like the one we saw at the end of March into April? Which ultimately vaulted us up to that key 2100 level on S&P 500 futures? Or is this something more concerning? Something that's going to bring us back to the lows that we saw back in February? No way. Get out of here. If you look, the NASDAQ actually looks a little more bearish here. You go to NASDAQ 100 futures, a little more of a topping pattern in place there. We failed to even come close to recovering the highs that we saw back in the middle of November last year. And if you go back from a 3-year chart here, you can see almost a sort of a head and shoulders topping pattern with the neckline being down here at about a little under 4,000 on NASDAQ 100 futures. So we'll keep an eye on that level. Also the VIX. We know the elevated VIX has been a great spot to buy. The stock market, we get up to that 30 level. Talked about that in February. We're up near 30. Great spot to buy the market as the VIX gets dumped. And here we are at support. Guess what we're doing now? We're bouncing. This bounce is going to break out the highs that we saw back at the start of April. Something to keep an eye on. Of course, we're heading into May. You know what they say in May? Sell in May, go away. We'll see if that holds true this year. Did not last year. A couple charts to look at. Amazon zooming higher after the closing bell yesterday on earnings report. It was a nice trend line that it was coming up against. It's blasted through it, folks. So now you'd have to make the case new all-time record highs are coming for Amazon. I was in some puts. Those are not going to look pretty at the open. Whoever sold those to me, you're welcome. You're welcome, buddy. You can see the move up. We got down to about 600 just before the closing bell. Nice move up. We were breaking above that trend line. So Amazon, bullish. LinkedIn also moving higher. Remember, last earnings report got collapsed down to $110 a share from $200. This time around, nice little spike. We've retraced a lot of those gains, though, unfortunately, for someone who has a strangle on this stock. Wanted a bigger move, not going to happen. Baidu up after earnings as well. Analyst out upgrading the stock. This one that was down to what, 130 back in February. Almost up to 200. Could not crack that 200 this time around. So something to keep an eye on here. If Baidu cannot reclaim that $200 level, still to me looks bearish. And of course, Apple got the $100 puts for earnings. Carl Icahn liquidation news completely walloped the stock down from 97.2 to 94. And from a 2-year daily chart perspective, you can see the breakdown in progress. 8250, I think, is where it's going to head. And I talked about that even earlier this year. We got that ramp off the lows in February, but we got up to the trend line. And I think the 80s certainly more in focus now today than they were yesterday. I was looking for the move down at about the 94, 95 level. Once we break through that, that's going to set up the move to $80, $85 for Apple. A couple other stocks. How about the Book of Face? Facebook reported earnings soared yesterday, was up over 10% before pulling back with the rest of the stock market. But certainly, look at the trajectory. Look at the way it's moving. After its move off support in the middle of 2013, you could just draw a straight line through it. Respecting trend line support here certainly looks on a, not trajectory, but on a path to about 130. So Facebook is not a stock that you want to fight. Twitter, I was in some calls for earnings. Yeah, continues to disappoint. Look at us over the last, 12 months. Yeah, we got a couple candles to the upside, but for the most part remains in a downtrend once it broke through this trend line support. So Twitter, something now to stay away from, which means it's going to rally to $30 in the next week. A couple other stocks. How about Google? Coming down to that $700 level. Remember back at the end of February, the sell-off in February, that 700 level was really strong support. You see the wick reversal here. off that 700 level back in February. So look at us now. We're back to that 700 level. We break through that, folks. That's going to set up a move lower. We get into the mid 600s. Something to keep an eye on here, Google, for weakness and longer term revisit of that 550 level from last year. It's a possibility. Keep an eye on this support line here, 675 after the 700 level. We'll point towards that move back down to 550. VXX now, it's beaten down. This is a broken instrument, but over the short term, if we do continue to see the market pull back, the VXX could move back over the $18 level, which would be great if you got some calls. So I'll be watching the VXX again from a short-term perspective. VXX offers a great indicator of where the market's headed throughout a trading session. If you see it red and the market red, guess what? The market's coming back. You see it positive and the market's positive. The market's probably going to pull back, so keep an eye on that. A couple other GLD gold continues to break out in 2016. You can see the trend line here. That is former resistance. We broke above it. We are now flagging. Gold looks very bullish here. That's also going to continue to see point to strength with the gold miners. GDX coming up to that level I talked about previously. So there's more upside to go there to get to over that 26 level before we start to pull back there for GDX. UPBOptionMillionaires.com. The bell's going to ring in just a couple minutes here. Everyone have a great trading session, a wonderful Friday. And if you take the day off early, have a great weekend. Take care. Goodbye.